Good afternoon, everyone. We are now at the branch account, given the third method. And what we'll be doing with the third method is our ability to be able to also prepare branch account at the selling price method. I will really say that this has been a fruitful class whereby we have been integrating both what we refer to as physical class and the electronic class. I want to say I'm very happy because you guys have embraced the technology. So, any question for me? Any question, please? Yes, please, Gabriel.
Sir, I really need your help on this cost loss.
Okay.
And the question I've been seeing, they have not been putting it like cost of 20%, maybe it's markup or margin.
So what have
So
they
I've not
been
been able
putting?
to get that thing clearly. They will just put the cost and then the percentage will be there.
Yeah. Once they put the cost, that means they are telling that is the cost at margin. Because you always see it, you see cost plus 25% markup.
Yes.
They
don't put maybe it's markup or margin there. It's only cost.
No, once they use the word cost plus, that is telling you that is a margin. Sorry, that is a markup.
Markup.
If they want you to know it's a margin, they will put the word margin. So please, like what I told you yesterday, the keyword, anytime you are given the question is, once you see the word costs and you see the word plus, that is telling you that you are required to do markup. So any question about that? Is there any other person that have also tried the question? I've told you the beauty of this class is for you to attend any of the questions, and I want you to be practicing as many questions. That's why I gave you the past question. The diets that these questions have been asked and many years that they have been required as students to prepare such transaction. Any question? Okay, if there is no question, let's go to the third and final method. And under this method, we are looking at what we call dependent branch selling price method. Yes. Rachel, question?
Sir. Yes, sir.
Ask your question, Rachel.
Okay. Sir, when we have to use cost price to calculate the branch account, is it that the branch also sell at the cost, like, or they had like this? I don't understand.
Thank you. When you are asked to, can you mute your mic, sir? When they go to set at cost plus, that means what the head office is telling the branch is that you cannot sell less than that amount that you have sent the goods to him. You can't sell less than that amount. And that amount is the cost plus the margin. Now, this is how it plays out. You can have the head office send the goods to the branch at cost price, and the branch is at liberty to sell it at any amount above that cost, and that will be the branch selling price. Now, the second scenario is that the head office would have added his own markup, that is on his own margin or profit. That is not saying that the branch must sell at that amount. The branch can sell above that amount. But the thing is that he must not sell below that margin that the head office have added. Did you get that? Now, under this method now, which is selling price, it means the amount that the head office is actually selling the item is what is going to send to the branch. And the branch will automatically sell at that selling price too. So that's the three methods in their phases. So let's go back to this, which is our dependent branch, goods sent at selling price. Now, as what we have before and what we have been getting before as our fundamentals, we will always get to know that when we are preparing accounts, we will always start from what are the books to be maintained. So what are the books of accounts under this method? You have the first one that we all are familiar with now is the goods sent to branch account. After that, what do I have? Branch what class?
Inventory account.
Account. Now look at under this method, the goods sent to branch will be at selling price. While branch inventory too will be at selling price. So we are not going to have that challenge that we had under the cost plus, whereby the goods sent to branch is at cost price and we need a branch inventory adjustment account, but we don't need that under this. So they are all at selling price. So we also have our branch receivable account. Then we now have our branch statement of profit or loss. Now, please, I would like to draw your attention to something under this method. And that attention is for goods sent to branch. The goods sent to branch here, and I'd like to put it down as a lesson so that we all know what we need to pay attention to. So I'll say lesson, or you can say note. That under the selling price method, the goods sent to branch account we play the following rules. 1. Used to determine the sales value. We'll use it to determine the sales value. And because of that, number 2, use as, let me prefer using the word use. Use as the double entry item. Or double entry item for all goods, or say inventory related items in the branch inventory account. So that is what you are going to see as we move ahead. So you are going to see that the goods sent to branch will now operate like a double entry. So let me quickly do that and let's see what this looks like. We start from how we always do our transaction. We have what we call goods sent to branch. Now, please look at how these accounts will be. Goods sent to branch account. Then we have our branch inventory account. Now, our branch inventory, we have balance brought forward. The balance brought forward of our branch inventory will be a corresponding entry for our goods sent. Did you see that? So please note that whatever is our balance brought forward in the branch inventory account will also come here as balance brought forward on this side. So that is the first lesson I want you to get. And every other transactions follows the way we have been taking them in our past, and then we'll move on. Goods sent to branch. What's the accounting entry class? We debit what? Branch inventory account
We
and credit our
debit
goods sent.
the inventory accounts and then
Yes.
we credit the goods sent. Mr. Imba, before you move on,
Yes, please.
you said the balance brought forward of goods sent to branch account will be that of branch inventory account.
Yes, please.
Okay. The value, right?
Yes, at the selling price. In this case, we are not looking at anything like cost of, we are using the value, which is actually the selling price.
Okay, sir.
Okay, we have done goods sent. Now we all know all the fundamental things that follows. Here we can talk about return to head office. So we come here, we say return by branch at the selling price. We have our credit sales class. When I have credit sales, where does it go to? Ejo, where will my credit sales
Credit
go
go to debtors, receivable.
Branch receivables account.
Receivables account. And don't forget, our branch receivable will always have its own balance buffer. So we now have our credit sales. So after that, we also have our cash sales. Where will our cash sales go to, class?
It will go to the
Head
branch
office
cash
cash account
account,
or bank account.
head office job.
So we now have our cash sales. Now, can we get the other item that we have? We now have our goods stolen. Now, please, this goods stolen, I have some story to tell you. The goods stolen will be recorded in the goods sent to branch. Please now pay attention. The goods that is stolen, that we are recording in the goods sent to branch, is to help me in order to get my sales. But when we are recording the goods sales account, it must be well separated. We are going to analyze by saying the goods stolen will now be divided into their period. Normally, the goods that is traditionally affect our branch inventory account, which is at the selling price. But we are going to divide the treatment into two. We are going to account for the cost of the value, and the cost of that value will be taken to the purchases component. Are we there now? We are going to use it when we get to our purchases. So what you are going to see is that the goods stolen must be adjusted with our purchases. Are we getting what I'm saying? So that when we get to our goods stolen, when we get to our branch inventory trading profit and loss account, which is the segment of profit or loss, you are going to adjust it. And please, that amount will be taken care of from whatever is our purchaser. So we look at that. Then we'll take the profit element to the expenses account. So long. So what we're having is that. So what we need to understand is that when we now get to the goods, when we get to purchases, we are going to adjust for that amount, saying that the goods stolen will reduce whatever we're having in our cost of sale. So our purchase. Okay, let's go to the next item. Having taken our goods stolen, we go to our cash sales stolen. Remember that we go to the normal account that we have, but it will not go to our goods spent because it does not involve goods. So we now have allowance of selling price. That will also affect our goods sold. So let's focus on receivables. On the receivables, what we need to do is to now look at what was the cash received. We account for that. Then here we'll talk about return to head office. The return to head office will be taken care by the, so we have what we call return by customer. We record that. Then we can also have our return to branch. Now see how this one is interesting. You are just speaking the value. Return by customer. So now receivables, you still have what we have. Bill receivables. We have bad debt. After our bad debt, we have other account, which we talk about discounts allowed. And at the end of the day, we have our balance carried down. Don't forget, we can have what we call dishonored check here. And we can also have cash refunded. Don't forget, we can also have what we call bills dishonored. This one is just talking about control account. Now, at the end of the day, we have the balance carried down. Please note, the balance carried down will be written here. So that becomes my balance brought down. As I have the balance brought down here, it will also be my balance brought down in my goods sent, which will come as balance carried down. All things being equal, yesterday we said, and we're also repeating now, that the branch inventory account must be self-balanced. So once it's self-balanced, there's no issue. But please note, where the branch inventory account is not self-balanced, we said that if it's having a shortfall on the credit side, is referred to as normal loss or goods in transit. The examiner will give you the adequate information, or we call it apparent loss. But if you are having the shortfall on the credit side, we refer to it as what we call apparent profit. And that is that. Now, please, for the formation under goods sent, our goods sent account is aimed in order to determine our sales. And at the end of the day, we always have a balancing figure here, and that will be our net sales. So that is how to determine our sales. As we move ahead, I also give you the formula that we can use in case you are asked to determine sales in short answer. So this one we also have whatever is the cash received from customer. At the end of the day, we have our balance carried on. So the next account that we move to is now what we call branch statement of profit or loss. Please, the statement of profit or loss here will consider the trading transaction. So you are going to look at the sales. Where do we determine this sales for? Determine from where, please? Where do we determine our sales value? It was determined from the from goods sent to branch. Then we now need our cost of sales. I want you to now pay attention to this. For my cost of sales, I need the opening inventory. And under this condition, IS2 will come into place. My inventory that I'm going to record here must be at cost, which means that I will have to use the cost percentage times the value given, and whatever I have will be written here. So it means whatever is my value in my inventory, my opening inventory, which is the selling price, I will have to make sure that I convert it to cost in order to get my opening inventory. Then next, we now need to determine what's our purchases. Please, the value of our purchases will not be given to us. So we need to calculate the value of our purchases. Purchases value. So what's the value of the purchases to be recorded? In line with the principle, we are going to look at what we call goods sent to branch at cost price. So it means you are going to look for the cost price. Then we'll now less the returns to head office at cost. What's the return to head office at cost? The return by branch at cost and the return by customer. The difference will give me the amount. Okay, we have that value. Having got that, that is how we determine our profit. Then we adjust our profit with whatever is the value of the goods stolen at cost. We deduct it. Whatever we have, we add it. Then at the end of the period, we now get our closing inventory. Our closing inventory must be at cost, which is the cost percentage times the value. Will give us our value, we deduct, then we'll now get our cost of sales. At the end of the day, I'll get my gross profit. After getting the gross profit, we'll now remove all the operating expenses. What are the operating expenses that we can have? We have the discount allowed, we have the bad debt, all this value and others. And we deduct them. At the end of the day, we now have our net profit. That is altogether. In case you are also asked in short answer to compute for the sales, determination of sales value. The examiner might not give it to you, and you need to account for the computation of sales. For you to get the sales, you consider the credit sales value that was made, consider the cash sales, then you add the cash sales stolen. After which you deduct the following. And now say less the following, and the less will be returned by customer. What are the return by customer? Return by customer to head office. Please, it must be at the selling price. Everything here must be at selling price. Return by customer at selling price to head office. You deduct to branch. You deduct. Whatever value you have will be referred to as your sales. And that is the end of branch selling price method. Any question, class, so that we can solve the question? Any question? Others here can include what we call the profit on goods stolen, as well as your cash sales stolen. Any question, class? Okay, there's no question. We'll look at the next question. Daniel, if you are going to read the question for us, question number next. Daniel, and all these working two eyes in your book. Oh, yeah. Please, Daniel, can you read?
Sir, I can't read. I'm in a noisy place at the moment. That's why
As you have just spoken now, there's no noise.
Should I read it?
Yes, please.
Okay, sir. Orbit Limited operates from a head office in Ogun and a branch in Kogi. Goods are sent to the branch at selling price at a margin of 20%. The transactions for the year ended 31st December 2006. All figures are assumed correct.
Okay. Now, all those figures are assumed, and you are required to show the necessary ledger in the account of the head
office to
using
record
which
the
method?
transaction using the selling price method.
Okay. So if that be the case, let's quickly solve that. The examiner have told us that the method he wants. So what's the method that the examiner wants us to apply? The selling price
method.
So let's get that done. I want to make sure I have two accounts side by side so that you can help me out. What's the name of the company? Orbit
Limited.
So the first account I need to prepare is what we call goods sent to branch. And we are working in Naira thousands. Then we now have branch inventory account. Like what I've told you, first thing you must do is the balance brought forward so that you don't make any mistake. What's the third account that the examiner asks us to do? We are not informed, but we all know that the next account should give us branch receivables account. Then I now need my branch statement of profit or loss. Remember, this method I'm using now is called mass attack method, and the originator of the mass attack method is going to take you tomorrow, sorry, on Saturday. That is Dr. Olariwaju. So I want you to pay attention to that method. Yeah, what we are doing is that we are drawing all the formats already, and then we can move. If you are with me, we can now quickly move on, and then we take all our transactions as they operate. So reading this question, some of you will look at it that why is the examiner giving me the margin? Giving us that margin, well, we'll get to our trading account, we'll see that. And the margin is 20%. So let me just start. Opening inventory at the branch is 50. So I have my 50, balance brought forward, and balance brought forward 50. Goods sent to the branch. What's the double entry? I debit my branch inventory account. Goods sent. How much, please? 450. Then I credit my branch inventory. Sorry, credit my goods sent. How much? 450. Next, do I have goods returned to head office by branch? What is goods returned to head office by branch? Class, returned to head office by branch. I'm looking at 45. Or you don't have the question with you?
Yeah, it, sir.
And so am I giving you the right figure? Return by branch, 45. Next item, goods returned to head office by branch customer. So in this case, I go to the branch receivables account. So come and say return to head office, 10. So I have my return by customer, 10. Next item, don't forget our branch receivable must have balance brought forward, which you don't know yet. Next, I have credit sales. What's the value of my credit sales? Credit sales is what? 300. Okay, for those of you that you don't have the question, I'm going to quickly just share the question so that you can get where I'm getting the values from. So I don't have people telling me that they did not get it. So you can snap. Oops. Sorry for that. But okay. Oh, technology. So this is the question. We have done cost plus. So we are at this point. So for those of you that want to screenshot, we have it here, question 3. And we're having it scroll down. So which you have. In order to make it easier, let me just give you as a one page. So this is where we started from. Let me make it 2 pages so that you can see. So we have the question flowing from number 3. We are now at this point. So you can see where I'm picking all the values from. So I think I stopped at credit sales. So let's continue from there. So what's my credit sales? I think I stopped at credit sales, and that has been duly recorded. So I bring it here to credit sales, 300. The next item I'm having is cash sales. My
96.
cash sales is how much, class? 96. So we should go to the head office cash account. And what is the amount? 96. Next item that I have is authorized allowance of selling price. So I have my allowance of selling price, which is 4. So comes the allowance of selling price. I have that to be 4. The next item I have is goods returned to branch by branch customer. So the customer is returning to the head office, to the branch. That's 20. Next, check receipt from customer, 200. I have that, which is from my branch receivables. Next, I have cash discount. The value of my discount is 10. Then I have bad debt. My bad debt is 8. So I take those ones straight into the statement of profit or loss. Next, I have expenses paid by head office. That is 28. So that expenses to go straight into my P&L. After that, I have cash sales stolen. The amount is 5. That goes into my P&L straight. Then I have goods stolen. The goods stolen is 15, which comes here as goods stolen 15. But don't forget, The goods stolen will be divided into two. I need to know the element which is cost. At cost, I have 15 times. Now, the question is this: what is the cost element? If I have been told that the goods is sent at a markup of 20%, what will be my cost? That will be how many percent? 80%. On what we did yesterday, that I told you how to separate, that will give me 80%. Then the profit element will come here. That is 20% times 15. So I guess this is 12 and this is 3. I'm deducting this from me. The last comment is balance carried down, which is 55. And it comes here as balance brought down, 55. And then that equally comes in. Balance brought down, 55. Balance carried down, 55. Class, I am through with all the adjustments in what we have in the question. So I now need your help to give me the total. So let's start getting the total of all the transactions. The total here is 500. Please, what is the total of the debit side of goods sent? What is the total of the goods sent? Because we need to get the balancing figure. And that balancing figure will be my net sales.
Sir, the total is 129 in addition with the balance carried down.
Is 129. So what is now the difference?
The difference is 371. Wow.
That is coming from Daniel. So everybody should know who gave us that value. So the sales is 371.
Yes, sir.
Thank you. Now can we get the total of the inventory? You get to see that the value should self-balance. That is 520. Can I get the amount on the debit side? 520, the amount on credit side. What is the amount on the credit side? Rachel and Co, what is the amount on the credit side?
Sir, it's 520.
520, thank you. So let's move to this side. The total amount of my receivable, I have 300. So what's the balance carried down?
$52.
Okay.
52.
56.
52.
Okay, balance carried down, brought down is 52. Okay, I haven't done that now. Let's now go to our cost of sales. We have been told that this must be at cost. So our cost is going to be 80% times what is the value of our opening inventory? Our opening inventory is 50. So what is 80% of 50?
So how did you get 80%?
80%, thank you. In the question, we're told that the selling price is 20% margin. So if the selling price is 20%, what will be the cost?
%80. 80%.
Yeah, thank you. I want to remind you what we did. Remember that we said once they give us a margin at 10%, the cost will be the balance. That means 100 minus it. So in this case, they gave us margin at 20%. So our cost will be 80. So what's the answer, please? 80% of that will give me what? 40. So let's get our purchases. So what is the purchase value? And what's the formula to calculate the purchase value? We need our goods sent at cost price. So that would be 80%. That would be 80% times what is the cost? What is the value of the goods sent? Value of goods sent was how much? 450,000.
450.
So we say times 450,000.
The answer is 360.
360. Thank you. So we are now looking at the returns. We are looking at what we call returns to head office at cost price. So who are the people that returns to head office? By branch. The branch returned how much? What was the return to head office by branch? That is 45. And the return by customer is how much? 10. So this is times 45. Then by customer, we have 80% times 10. So this is 8. What's the upper one? 360. So what's the addition of the two? 36 plus 8. 12. Is that 12? I disagree.
44.
44. So 44 from 360, what will I get?
404.
404, okay. 360 minus 44.
Okay, minus.
That'll give me 316. So it means my purchase value is 316. So let's look for the difference. 316 minus 12, what would that give me?
304.
That'll give me 304. So let's get our closing value now at 80%. 80% of 55. What would that give me? 55 is the closing inventory. So what would that give me?
$44.
44. So can you give me my cost of sales?
$260.
Pardon?
No.
40 plus 304 minus 44.
I do rubbish. 300.
Give me 300. So my gross profit will be what? 71. So can you give me the addition of all my operating expenses? plus 28 plus 8. So what do I have? 54. Pardon? What's the addition of everything?
Yeah.
So what would that be the difference? 71 minus 54. Pardon? 17. So that's the answer. So let's write it down properly. 54. Give me 17. Is that correct? So that is it. Any other item? Yes. So let's wrap up this. This is 296. 296. 296 minus 28. What would that give me?
68.
Pardon?
68.
268. Of 268. And that is the end of branch account. Any question for me? Any question? If you look at this question, you can use this question to answer the same question I gave you, which you use the cost price method. So if I apply that method to this, I'll get the same answer. Any question? Any question, everybody? Okay, Gabriel, I guess you are still in office. Daniel, any question? Bola, no question? Okay.
No, sir. No, sir.
Okay. Thank you. What I want you to see is that this is now what the examiner can ask you. And the whole syllabus would have done.
Please.
Yeah. Yes, please.
Forgive my. What is the possibility of this question coming out, sir?
Possibility of branch account coming out.
Yes, sir.
Is 60 to 80%.
60 to 80.
Now, possibility of cost price coming out is 5%. Possibility of cost plus markup coming out is between 80 and 90. If you look at all the questions,
this selling price seems to be the very big one.
The cost plus is the one that you get to see that the examiner used to ask.
Okay. Okay, sir.
So the selling price can also compare. So I don't want a situation whereby you get to the exam and you say you have not been taught. So what I've tried to do now is to explain this to you.
All right, sir.
Okay, what I want to do is that I must not relent on my comment. I would have said we should just go straight to contract account, but no. I have agreed that contract account will be by 6:30. So
yes,
that people, we have a lot of people on the platform.